Top three things this morning in my notebook. Number one, I'm going to hit on volatility. Number two, going to hit on oil. And then number three, going to hit on the 10-year yield. You had volatility down about 15% last week. Don't forget it's up almost 50% for the year to date. The problem here, of course, is that everybody is now long of volatility. The biggest net long position in macro now is actually long of the VIX. Is that the VIX is signaling a higher low in as much as the S&P is signaling lower highs. Oil. Big move last week, up 3.3%, up for the second week in a row, but that, like the S&P 500, is signaling lower highs in as much as oil volatility is signaling a higher low at 23. Oil, looks like two-year bond yields did last week. They were up another 5 basis points. But what's happening to the long end of the curve is much more interesting. You know, not a breakout to higher highs. Top end of the range is 295. Low end of the range is now 280. So we're bullish from a bond yield perspective on a trending basis, but on a shorter term basis, looking for reflation rollover data to impact the curve on the long end. So again, making lower highs from here as opposed to breaking out above 3%. And I'm not a buyer of anything, or any exposure of a breakout in bond yields at the top end of the range. I want to fade it. Then at the low end of the range at 280, I might take the other side.